Hi, my name is Baldwin Burgess of Silk Invest. I'd like to tell you more about investing in the rising frontier market middle class. Over the next 15 minutes, I'd like to tell you a little bit more about our company, the frontier markets opportunity, how you can invest through equities, fixed income, and private equity. During the presentation, I'll be showing a few slides, so if you want to take a closer look, I suggest to hit the pause button and then continue afterwards because I'm going to try to go quite rapidly because we have roughly 25 to 30 slides to show. Here we go. So, Silk Invest is a company that was set up about 5 years ago, and our goal is to open new routes for investors into the markets that are fairly unknown in Africa, the Middle East, and Asia. And what you see are all these dots, and these dots are essentially where our people are from. So we are from the frontier markets. We know it very well, but we're also locally based. Our headquarters is in London, but we have a presence in Morocco, in Cairo, in Egypt. We have a presence in the UAE, in Dubai. We have a presence in Kenya, in Nairobi, and in Joburg, in South Africa. If you have a look at our team, you'll see also that these people are um, indigenous investment people. They have a combination of experience in investment management, but also understanding their regions very well. And we're organized in two divisions. One is the public markets, where we manage listed equities and fixed income. And we have a private equity division that focuses on consumer facing food companies. We have an operations team that makes it possible for us to invest very efficiently. Our product range is organized as follows. We have UCITS for funds listed in Luxembourg that invest in equities and fixed income. So we have four funds. One invests in the entire African equity proposition across the continent. The Silk Arab Falcons Fund is a MENA fund, so it's the Middle East and North Africa. The Silk Road Frontiers Funds invests across the frontier markets of Africa, the Middle East, and Asia. Fixed income is another diversified fund that invests in corporate and sovereign bonds across Africa, the Middle East, and Central Asia. It invests in both hard currency and local currencies. And then finally, we have a Luxembourg-based SICAR vehicle called the Silk African Food Fund. And there we invest in SMEs in the consumer-facing food sector. Let's have a look at the frontier markets as an opportunity now. So they're very difficult to ignore because already they make up for 12% of the world's economy. And if you look at it from a population point of view, which we find quite interesting, is like today they're already 25% of the world's population. So again, it's very difficult to ignore. But if you see the growth trajectory that is projected essentially by demographics, then these markets will account for more than 1/3 of the world's population. And notice how much of the growth will happen in Africa. Also, these countries are in a very solid state right now from a balance sheet perspective. They really don't have the debt burden that developed countries have. And from institutional strength ratings, they really don't rank that bad as they are perceived to be. So what we're doing here is we're comparing the legal system and the corruption level and minority shareholders' rights with markets such as Russia and China. And often some of the frontier markets, the major frontier markets, rank better than the Russia and China, which are quite popular among investors because they're a big part of the BRICS and the emerging market scene. But the way we like to look at this opportunity is really through five major themes. And the first one is really about consumers. There will be more consumers. There's a rising middle class. It's about the entrepreneurs who know how to create businesses that benefit from this rising consumer demand. It's about how technology and innovation really uh, accelerate the trend of middle class emerging and the solutions that can be created for them. It's about foreign direct investment that is essentially should be seen as a vote of confidence by other major economies in the world into these new and upcoming countries. And it's about economies that in some aspects are more competitive for business and for investors. So looking at more consumers and more entrepreneurs to do business with them. The consumer base in Africa is quite compelling case because currently there are just over 1 billion people in Africa. 2/3 of these people are essentially, or let's say 70% almost of these people are essentially living above the poverty line. But the key message here is that the poverty level is set to decline in the future, and coupled with demographics, we're going to see quite a rise in the African population. And in essence, what we're also going to see is we're going to see the creation of around 500 million new consumers. That's an opportunity worth pursuing. Also in Asia, there's a similar trend. If we take out Asia's biggest economies in terms of population, such as India and China, and we take out Indonesia and so on, which are are already fairly developed in many ways, and we focus on other populous and upcoming economies such as Pakistan, Bangladesh, and Vietnam, there is a large set of population, again, very young. They're going to grow very fast, and they amount to quite an economy. So, again, difficult to ignore. And if you look at the entrepreneurs, this is really, for us, what most of this story is all about. It's about people who have created businesses that satisfy basic needs. They solve problems at a profit margin, which in the end is the essential definition of an entrepreneur. And so one of the problems is that getting people to enter the financial system by um, getting people to open bank accounts. It's a very important part of a development of an economy. And Equity Bank has been very creative and propelling that forward. I'll speak about that a little bit later. Another basic need is the need for decent housing. You can't really feel like a consumer unless you're okay with the way you live. And so a company like Adoa has built a very large scale proposition where they can deliver a high quality housing for very low prices. Such their unit price typically is around $25,000. This is very compelling. And then other problem is essentially access to basic needs in the food sector, or in with there's a lot of infrastructure building going on. There's a tremendous need for cement, and Aliko Dangote understood this very well. So he solved that problem by creating businesses that focus on local delivery of those needs. And so his food empire and his cements empire have made him Africa's richest man, with a fortune of estimated to be between 18 and $20 billion. These people also are the role models for other African entrepreneurs because they have been smart enough to create capacity. They've been they had the foresight of building formal businesses and then listing them on the stock exchange. And essentially, what we have now is they are increasingly becoming regional and global players. Technology was also very important in this big change, and it continues to have a transformative effect. If you look at the last 8 years, the trend in penetration has been tremendous. It's from 15% all the way up to almost 90%. And what we're seeing, that technology has not only enabled a technological innovation per se, but it's also connected more people to each other and to the rest of the world. And that is important as well because it alters the expectations of a growing consumer base. They see what other people live like in the rest of the world, and it really shifts their perspectives to a higher level. And then the foreign direct investments are very important as well. As I mentioned before, it's like a vote of confidence by the rest of the world in these regions. And what we're seeing is it's a very diversified uh, flow. It comes from all over the world, really. But a large part of that is also frontier markets investing in each other. And this is really very important to follow because where a lot of foreign companies are investing, that heralds further growth in the future. And then, a lot of the frontier markets are rather competitive in the scale of things. So this is a ranking. So the lower the number, the better the ranking. And what you see here essentially is we've compared it to some of the to the four BRIC economies, and some of these frontier markets not only rank better, but some of them even rank better than what you will find in Europe in terms of ease of doing business. And this is places like Saudi Arabia or the UAE or even Qatar have a reasonably good ranking when it comes to um, setting up businesses, doing business, and so on. Let's look at the equities and how we can invest there. Well, first of all, uh, they're quite undervalued. You're looking at pretty attractive forward PE ratios. Compare that to the world in India. It's still at a reasonable level. But what's especially interesting about frontier market equities is that they also still offer quite a high dividend yield. So what we're looking, you have to put this in line also with the growth opportunity. So in essence, you're getting quite a nice discount to the rest of the world when it comes to the valuation of companies that have tremendous growth opportunities ahead of them. And then when we invest, it's really all about selecting the winning business models. And again, that means that these are businesses that are capable of meeting the future demand. And we focus most of our time on finding these companies and figuring out what the right valuations are. And timing is obviously also important. The way we make sense of our world is really by following fundamental factors rather than following benchmarks. We believe benchmarks are not a very efficient way to invest. There's many reasons for it, but mainly it is really because they don't really reflect the reality, because they lean very much towards the current capitalization. But we like to see leading indicators such as population is important if you're focused on consumers. Foreign direct investment is also important because it sort of anticipates a lot of future economic activity. And then obviously also a momentum of GDP is quite important. So high GDP growth always attract more foreign direct investments, or the other way around, foreign direct investments influence GDP growth. And there's a multiplier effect when there's large populations benefiting from all that. So that's sort of how we structure our portfolios. We do this on an annual basis. Essentially, it's an exercise that allows us to construct a correct portfolio composition that reflects the medium term. A few examples, very briefly. Air Arabia is a low-cost carrier based in the Gulf in Sharjah in the United Arab Emirates. They've been able to build quite a nice niche for themselves in a place where there's world-class airlines that serve the entire world. But their focus was really more on the local economies around them. There's a lot of expat workers that fly in and out of the region from India, from Pakistan, and from other African countries and Arab countries around them. So they've connected those hubs, and also there is a Moroccan hub and in the planning, and they're going to further expand. So their vision is essentially to connect not only Asia with the Middle East, but also connect North Africa to the rest of Africa and to Europe. So they have big plans, and they've proven that they can manage a company like this very well, given the volatility in oil price and all those kind of things. So, and then we have another example which we pulled out here is Pakistan's leading telecom player. This is really an interesting business because again, Pakistan is a very populous country, and it is still rather unstable and really in unstable environments. Telecommunications are very important. The need for people to communicate with each other just becomes a lot more important. So things seem to be improving in Pakistan, or the outlook at least is much more positive, and they've definitely built a strong position to remain the leader in there. And then we have Equity Bank. They have essentially found ways to bank the unbanked. And the unbanked people typically live outside of the cities in rural areas, and that's where a lot of the population in their home country, Kenya, actually reside. So they've been very creative on how to do this. They've found instead of building branches everywhere, they found a rather low cost way of accessing vast amounts of people who still didn't have a bank account. By using agents, or what I guess inspired most international investors is how they really pioneered mobile banking and providing banking services on a mobile phone. And then Fan Milk is Ghana's leading dairy company. It's quite revolutionary because it's been able to develop a vertical distribution model. It's also has a product range that is quite customized to the local flavor. Many young Ghanaians and Nigerians will know Fan Milk because of those thousands of people on bicycles selling ice cream. But that's just to show how such an analog approach to distributing their goods by themselves also has had an impact on society, because it really has created an enormous amount of jobs, and all that by basically delivering a basic need for people, which are dairy products and youthful populations. It's hot in West Africa. So uh, children like an ice cream every now and then. Fixed income is a fairly new universe. The frontier market fixed income. It's about $500 billion of issued debt. Markets are generally still very small. The issue size is growing. The number of issues is growing, and the way to access this really is by uh, and there's three dimensions of or three building blocks at least of building a portfolio. On the one hand, you have an attractive spread differential in hard currency. There's a local currency aspect to it, which provides you with high yields, and there's enough local currency to diversify across. And then there's a corporate bond, which are companies with generally good balance sheets, but they still are forced to pay high interest rates because of the factor that they're either illiquid or quite unknown. And so what we see here is a graph which sort of positions the hard currency based frontier market interest rate levels, uh, generally around 7%. That's quite a nice spread when you consider that developed markets fixed income levels are very anemic when it comes to interest rate levels. And the local currency offering is equally attractive because, or more so, what you see on this chart. If we average this out, there's around 13% yield to be had across a number of currencies across which we can diversify. And these currencies can be volatile, but if you diversify, it's proven to work quite well. But despite their volatility individually, they seem to be quite undervalued. And what we've done here is we've used a purchasing price parity comparison conversion level versus the US dollar. And what you can see if Brazil is at par and Switzerland is looking a bit expensive in terms of currency, there is a bit of a discount to be had, in some cases quite a discount to be had in the local currency. Again, this is obviously a way to put a valuation on a currency in the medium term, but what protects you against the short term volatility will be the diversification between them. A few words about private equity. Well, we invest in the food sector in Africa, and we've selected a few economies which are key. And the reason why we do this is because it is still the largest part of the household expenditure. It ranges from around 40% in Egypt to all the way up to 80% in Ethiopia. And the way we like to work is, we are active minority investors, and we get quite involved in the companies. We provide growth capital, and we also help them essentially build a higher level of efficiency and help them scale up to levels that they can always anticipate the demand. So it has also quite a good impact in what we do because we essentially also are helping satisfy a basic need, which is food, and there's also a strong job creation aspect to what we're doing there. But what's also very interesting about African private equity is that it is still at very low levels compared to other economies when it comes to private equity penetration. This is a chart that measures the private equity investments as a ratio over the GDP of these countries. The companies are really are they need to turn to private equity investors often because interest rate spreads are very high. These kind of double-digit interest rates are very difficult for businesses to honor and satisfy. It and so also the banks aren't really focused on providing loans. They're really focused more on opening bank accounts. So there is an interesting opportunity for private equity investors because this is sometimes the only way that companies can really access the capital they need, and apart from the capital, they can access the know-how, which allows them to become stronger players in their respective economies. Also, there's the food industry is quite interesting because those companies that have been listed, and they've both. First of all, they are serving a very healthy demand, but investors also seem to understand very well the case of a food company. And what's also very real is that some of the large international food groups are very aware that there are lots of consumers and future consumers in Africa, and so they're all really trying to get into there. And so there is a case also to formalize local SMEs and to make them ready to be able to either partner or be absorbed by larger groups. So there is a big case for this. We like to invest in these countries. These are our focus countries. There's a few reasons. First of all, they tend to have quite a large population, but they also seem to be they're also quite functional financial markets. So it's Morocco, it's Egypt, it's Ghana, Nigeria, Ethiopia, and Kenya. And if we map the universe of potential food investment targets, there's also quite a number of SMEs that we can invest in. So there is a case for a private equity fund to spend time and find good businesses to invest in there. Let's finalize on a few examples. These are three of our portfolio holdings. The first one is NAS Foods in Ethiopia. They make biscuits. Ethiopia is a country with 90 million people, and it's growing extremely fast, and it's a very youthful country. So biscuits are always in demand. Nigeria in Nigeria they like their chicken, and this company has really understood the local appetite and flavor and taste, and they've been able to build a very welcome proposition. People like the brand, that they like the food, and so they're expanding on a national basis and quite successfully so. And another company we've invested in is Al-Azli. It's an Egyptian confectionery company. It's a household name. It's been around since the 19th century, and they make spreads, halwa and tahina. And again, this is a company that we are helping to grow and satisfy future demand, because again, Egypt is a very young economy, 90 million people plus, and it's really the focus that we really have on with all these companies is on the domestic market. That's why we choose economies which have a large population. So thank you very much for your attention. This is where we are, and also if you would like to discuss this in more detail, or please feel free to get in touch with us on silkinvest.com. That's our website. Go to the contact tab, and then you can send us a message. Love to hear from you. Thank you.